I think that what we're experiencing is a perfect storm for gold, but I really do want to make sure that people put what's happening today and the various macros that are so supportive, providing tailwinds for gold, within context. So people will talk about real rates, people will talk about the dollar. Let me express it this way. When you look at the long-term cycle in gold, you see that the first wave, let's say from the 1990s that took us to $1,800. For a dozen years, gold went up every single year, regardless of what was going on with interest rates, what was going on with inflation or disinflation during that period, political issues, the dollar, commodities. In 2007, when I sold my energy company, in order to pivot into gold, gold was at about $550, $600 an ounce. The price of oil was around 120. And my belief was that I didn't know any longer whether gold was worth $20 or $120 because of this advent of something called shale. But I did believe that gold would give me everything that I'm looking for as a currency that could not be debased at will. And it did. So we're talking about a moment where dollar euro was 147, where the price of oil was 120. Since that time, the dollar has strengthened against the euro substantially. I don't know where we are today, but let's just say 110, 115. And the price of oil has fallen by half. And yet gold has multiplied fivefold. There's a reason for that. It is the best performing currency in the world. It's the best performing commodity of any size. And regardless of whether there's been inflation or deflation, gold has done absolutely beautifully. Now, I do believe that what we're seeing now is essentially the continuation of the bull market that began, when gold was at around $300 an ounce. And that is to say, wave one took us from 250 to 1800. We had a correction, and now we're embarked upon a third wave. I'm not saying that so much to be referring to technical cycles, but I do believe that this wave has the potential to take us ultimately over the coming years to where the Dow is in terms of the numbers. Well, it sounds outrageous, but if somebody had said when the Dow broke out in 1980 over 1,000, or look back to 1987, 1988, when the Dow was only at a few thousand, and if somebody had said the move isn't over, the move is just beginning. And I believe that we are in an era where gold is a long wave investment. I'm not saying that we won't have pullbacks, even in the Dow. I think everyone, you're probably too young, but everyone can remember 1987 when the Dow plunged by 20%. Well, you can barely see that move on a long-term chart of the Dow. You really can't. It's a tiny blip on the Dow's way to 40,000, 45,000, what have you. And I think that there is reason to believe that gold will indeed go into the 10,000s. I didn't say this before in an interview that I gave when gold was at 1,200. And I was asked by David Rubenstein, where do you see gold going? And I said my long-term outlook from 2007 was that the first equilibrium level would be between $3,000 to $5,000. Right. I didn't venture my longer-term view because we still had to get to 3,000. But now that we have, I feel less reluctant. But the point is, if you're a gold bull, get ready for volatility because that's just the nature of bull markets, and gold will confound you. But the long-term trajectory for gold and the implications for gold mining equities is absolutely explosive. What I do believe is that if I am right about silver, whether it goes into triple digits or not, the silver equities will go ballistic. And we have two private companies that we're planning on taking public next year, each with hundreds of millions of ounces, if not beyond that. And we see that that has the potential to outpace anything in gold. So for us as investors at Electrum, our focus is on Nova Gold. We've had an excellent experience by selling one of our silver mining stories, Gatos Silver, to First Majestic, which has done extremely well and has great leverage. And we have two others that in the silver space that will go public. So as I said, like a true conservative, we have a lot of present happiness. But perhaps with silver equities, I believe that is the case. To my mind, the holy grail for a precious metals investor is investing in great assets, by which Donlin qualifies enormously. In fact, if you look at that combination of size, grade, exploration potential, production profile, jurisdictional safety, mine life, and the rest, that combination of attributes is unique. Maybe the Sukhoi Log project in Russia, but you certainly wouldn't want to be on that side of the Bering Straits from a jurisdictional standpoint. But that's a fine classification. We're talking about the two biggest gold mines in development in the world. No doubt, from a national security standpoint, if you look at the strategy which has been employed by China in not only buying up all of the gold it produces, but also being the world's largest importer, I think that there is a very strong sense that the Chinese are understating their official reserves. They can do so technically by splitting them amongst SOEs or government-owned corporations, not to mention the central bank. I think that one day if they were to reveal what they have, they would certainly rival, if not significantly surpass, America's gold reserves, which are officially the world's largest. America is a beneficiary of rising gold prices. Ergo, America is a beneficiary of any remonetization of gold. And in that case, those assets that are in the United States are going to achieve premium valuations. So we are ahead of the curve on this, whether it's investing in gold or in silver. We've placed an entire emphasis on only North American assets. And of course, the United States to us is the safest jurisdiction in the world. Well, first of all, you've seen a revaluation of gold, which has essentially meant that every central banker who ever had the guts or any other anatomical parts to say, let's put money into gold, has been proven to be right. That's important. For a number of years, I've told people, watch what the central banks are doing. They are not dumb money. They are smart money. The fact that they're buying gold, or in some cases, not selling their gold when other items are on their balance sheet that essentially they've been forced to purchase for political reasons. This is insider buying in a good way, in a legal way. By central banks buying or not selling, they are saying that gold is something that we regard as being an autonomous asset class. It is by definition the only financial asset which isn't someone else's obligation to repay you. So even putting aside crypto and whatever, views one might have on that, the reality is that for the official sector, gold is the monetary instrument of choice if they're given the opportunity to buy it. And they've had positive reinforcement. So if you have the official sector on the one hand as a buyer, and I think it's extremely important that even when gold went to $3,000 an ounce, the Chinese essentially said to insurance companies, you can experiment by buying some gold.